Yes, indeed.
Hello, Internet peoples. This is Howie, and I know it's been several months since I made a video. To be honest, it's a number of things. I did a dumb thing in the market. I did not diversify, and I picked up a stock and sort of sat on it for about 3 months. So I was really hand tied as to what I could do. I'll make a video on that probably specifically because it's a pretty big leak or error that I made. But this video is actually going to be about something that I started back in October, which is following the biggest winners of the day and the biggest losers of the day. I followed them for 10 consecutive days after the biggest events, and now I'm actually going and looking 3 months later to see the results, because that's more what I'm curious about. This is more for a swing trading philosophy as opposed to a day trading philosophy. So I was working on this quite significantly for several weeks, and I've actually found a few patterns that I'm quite excited about implementing. I think with a few more weeks of research, I'm actually going to be able to develop a bit of a strategy for myself, specifically to the results of previous days combined with the actual price of the stock. So I will jump into this. It's a little bit weird guerrilla math, so I apologize if I lose you. There's a lot of numbers and data. But essentially what I did initially was I went through 10 days and looked at the biggest winners on the market. I sort of removed any of the really small stocks. Like if it was under, say, $5, I wouldn't track it. But basically the biggest winners of any given day and the percentage that they've gained here. If it was only like, my cutoff was about 3%, so if they didn't gain at least 3%, then I wouldn't even mark them. You can see I did 10 consecutive days, and then I did the same thing a little bit later with the biggest losers of the day. So you can see here, these are the biggest losers of that particular day. And then I sort of followed them day by day by day. Now what I have found is over a 3-month period, the stocks that started off as the biggest winners of the days have outperformed the stocks of the biggest losers of the day. So I'll start with the biggest losers, and so these are the opening stock prices right after they had their big loss. So for instance, Alphera back on October 22nd lost 13% and closed at $15.77. And today, which is January 18th, which is about 3 months later, it closed, or it's actually still trading, approximately $8.40. And these are their percentages. They're backwards, so if that's a 46% loss, 25% loss, minus 6%, so that'd be 6% gain, just an FYI. So essentially what I've done is I've taken each of these stocks that had the biggest losers of the day, and then I took an average loss or win gain for the entire group. So in this example, my average loss is 1.61%. So over the course of 3 months, give or take, these stocks after the close of the biggest losing are down 1.61%. And compare that to the overall market, which October 22nd closed at 15,412 and is currently trading at 15,211. The whole market is only down approximately 1.3% during this time. So these stocks have actually underperformed the market by about 0.3%. So that was sort of the big number I was looking for. That's sort of my, are these stocks after having massive loss in the 5+% all the way as high as 10, 15, 18%, after 3 months, after many months, are they going to rebound? And I guess the short answer is no, not really. So let's jump over to the big winners, because here's where sort of the exciting part comes in from my perspective. So again, this is exactly the same but completely opposite. So back on October 2nd, EFN stock jumped up 21%, KL stock jumped up 7.9%, and so on and so forth. You can see I've done the same thing, just keeping track of a bunch of different stocks who had the big winners of the day. And I took this graph, which is the 3 month later. So you can see all the way down here. Here's the percentage won or lost. This is going to be a little bit more than 3 months. It's closer to 3.5 months. It's basically from near the beginning of October till now. And you can see if it's negative, it's a win. And if it's positive, it's a loss. So this stock dropped 9%, up 35%, down 12%, etc., all the way down. So when we calculate the average from all of these, the total average loss is 2.34%, which sounds pretty bad. However, when I took the numbers for the entire stock market, which was from 16,017 to 15,211, the entire market was actually down 5.03%. So this group of stocks actually beat the market by about 2.7% over that 3.5 month period. So right off the bat, I'm like, wow, that's pretty good. If you can beat the overall market by 2.7% over a quarter, if that were to continue, obviously that's pretty impressive. That's beating the market by 10%, let's say, on average. So that was my first bit of information. So I'm like, okay, so it seems to me that big winners are more exciting to consider than big losers. And then from there, I wanted to dive a little bit deeper. So what I did next is I essentially highlighted each stock based on its stock price. So my categories are under $10, $10 to $20, $20 to $50, and over $50. And then I broke down the actual results of each of these categories, and that got me a little bit even deeper into some strategy ideas. So we have under $10, 10 to 20, 20 to 50, and over 50. And going down to the bottom of this data, you can see the win-loss for the under $10 is 0 and 4. The win-loss for the $10 to $20 is 4 and 11. For the $20 to $50, it's 6 and 7. And for above $50, it's 8 and 3. So as soon as you get into the $20 plus, you're actually looking at a decent return, at least breaking even. And then here's the ratios of the percentage won or lost. So again, under $10 stocks, they average a 15.29% loss. The $10 to $20 stocks averaged 9.15% loss. The $20 to $50 had a net profit of 2.89%, and the $50 plus stocks actually did almost 5%, 4.65% over this time. So even while the market was down 5% over this time, the $20 plus stocks all actually outperformed the market by a significant margin. So I'm actually going to go through now, and I'm going to delete stocks that are under $20 and sort of pull up all the data. That's sort of my next step in this game. And then I'm actually going to look at the daily results of these to sort of get an idea if there's a best time to come in. So essentially a stock has the biggest, it's in the top 5 biggest winners of the day. Should I get in the next day or the day after or the day after, sort of thing. So I'll do that now. I'll pause the video and we will see the results. All right, so I've done a few calculations. Not that many exciting things are coming out. I basically removed all the stocks that weren't between 20 plus dollars, essentially. And then I broke it down by wins and losses each day after the big winning days. But the problem, I put along here the actual stock market each day result, and right here you can see it was in the midst of a fairly significant correction right around early October. And during this 10-day period, the market actually went down 3% and had a number of consecutive losing days. So I've been trying to compare sort of the results of the stock itself, the stocks themselves compared to the market. And after the 10 days after, it's very close. The overall stocks are down 3.12% and the market is down 3.06%. So at this time, it doesn't look like there's a good time to come in within the first 10 days. I can definitely see that the day after the big movement up is not a good time to come in, because just in this average, we're at minus 0.3%, and the market was actually up 0.34% for this day. Perhaps the day after the next day close is interesting, because in this example, 0.82% up compared to the market being down 0.4%, so it's a 1.2% difference. But what I'm going to do is, I just don't think I have enough data at this point. I only have maybe 25 stocks, give or take. And again, this data was collected during a very volatile time of the TSX. Like I said, early October, when it corrected itself. I don't even remember the exact percentage, but it was quite a bit. See if I can pull up the TSX. These are the dailies. So early October, right here, you can see there's a significant correction all the way through till near the end of December. So it's challenging to, when the whole market is crashing or adjusting or recalibrating, it's very challenging to compare, a minus 1% loss with a minus 1.2% loss in this structure. Obviously, you can see the market. October the 2nd, it was at 16,000, and by October the 11th, it was at 15.3, and then by the end of October is at 14.7. So what I'm going to do is I'm going to redo this. I'm going to start paying attention and keeping track of the stocks again. After the biggest wins of the day, it's going to be stocks that are over $20. And then I'm going to keep track of them for about 10 days moving forward. So I'm going to do that for the next few weeks, and then we will see what kind of data I can collect from that. So I hope you enjoyed this video. Hope it wasn't too boring. Feel free to comment on what you think's going on.
Yes, indeed.